What is going on, everyone? Welcome back to another video, another day, another dollar, and we're going to be breaking down our futures contract per usual. Right now we are looking at the ES futures contract. Wrong thing. And we're just going to be breaking down our 30-minute time frame. Just going to mark destinations, kind of review what's happening here and why it's happening, as we had a rather choppy day, end up 10 wide right here around the 51.44 level, which is healthy consolidation. But in order for this market to really get some legs to the upside, we need to start taking out this 51.50 level, finding acceptance above that, and then start attacking these other sets of single prints, and then get into that upper distribution from that quadruple distribution day down. That was back on this day. See if I can't, boom, show you guys real quick. But back on this big quadruple distribution day down, we've been trying to slowly eat away at it. That was a rather large range. The range for that day from the 15th was roughly 120 points. So it's not going to be easy to take back, but we are slowly starting to do so. We finally filled that set of single prints on the upside. That filled right here at 51.53.75. We have the next set that fills right here at 67.25, and then we get into that other distribution, which is right here. We need to find acceptance above 67. We need to find acceptance above 67 and trade in that distribution between 89 and 67. If we can trade in that distribution from 67 and 89, we will eventually begin to take back more of that distribution day down. And finally, hopefully, get back above that 5,200 level, which will definitely be a level to monitor, as we struggled here on that day to find any acceptance back above 5,200, as it was a wide point of control right around that level, and that is kind of where change took place on that day. So, what have we been doing here recently? Well, we've just been chopping back and forth between two distributions. Now that we finally filled a set of single prints, we are one time framing up on the daily. We've just been chopping around between two distributions. I'm gonna highlight these distributions real quick. So we got this distribution here that's acting as some type of resistance, right? We have yet to find any acceptance above 51.50 and get into that upper end of that distribution right there at 65.25. And then we had that lower distribution, which we finally took a while, but got acceptance back into, which was right here. So right now we're just kind of chopping around. As you can see right here, there's no volume, very low volume done in that area where we kind of liquidated lower. If you can see that right there, liquidated lower, and look at what we're doing. We're just packing in some volume and trading back and forth in between these two distributions. Now, first time down here today, guess what? We liquidated a little bit lower, dipped into 51.20, and then shot back up. All right. So first time back into that distribution where we finally got a break away from, we rejected out of. Now we have yet to find any acceptance, like I said, above that 51.50 level. We need to find acceptance above that and then begin to work our way up higher. So what does that look like? Well, that looks exactly like what we're doing right now. Maybe a little bit more consolidation, keeping value to move higher, right? Keep value moving higher, setting higher highs, higher lows, and we will eventually work our way back up to that 5,200 level, or at least that is the hope. If not, then keep an eye out and see if we do not fill this week, if we do not get above 51.67.25 and finally start working our way back up, then this market may begin to roll back over and test the 5,000 level again. All right, so this area, big time area between 51.50 and 51.67, we need to find acceptance above that level. Otherwise, we could just continue to chop in between, and which very well could happen, as we do have FOMC on Wednesday, so we could continue to chop in this range for the next day or two before Thursday, where we finally see some type of resolve and get a move either higher or lower. So I'm just going to be kind of very cautious on how I trade this. this market right now. I am in a swing long position. Back above the highs is the target. So I am in a swing long position in SPY with the SPY options. I broke that trade down on Friday or Thursday of last week. So if you guys want to check that out, go check that out. But that is kind of the idea, is finally start to get this market moving back to the upside. And we're starting to see that, starting to see the baby steps of that progression. Now there were a couple of several opportunities to trade. Fading extreme highs and extreme lows or edges worked out well. As you can see here, trading today was all about the rotation. So if you caught the rotation properly, you made money trading to rotate down lower, selling against that A high up here at 51.54. Anytime you pushed up against 51.50, essentially you took a sell to rotate back in to around 51.40. And then same thing on the long side. Each time we came down near or got near low, creating a new low, fading the extreme was the idea, because we had higher value and just really wasn't looking for this market to rip lower and hold trend on the downside. So this definitely right here would have been my trade entry on the long side. I definitely would have, for me personally, I would have been looking for that trade against this 51.24 level. In anywhere in this range was an area of good buying opportunity, in my opinion, to come back up into 51.40. So buy 51.20s, you're buying, coming back up to 51.40, making some pretty good dough there. Other than that, there really wasn't a whole lot of trading to do today, other than just being patient, trying to find those edges and extremes to fade. And we'll go ahead and mark these destinations, and then we'll look at the daily time frame, the daily and the weekly time frame, as we did attempt at an outs or an inside week up. And with those, anytime we have an inside week up or an inside day up, we got to monitor it for continuation or lack of. And right now we're kind of seeing the lack of continuation. Now, that could be because it's end of month. That could be because we have FOMC coming up, or just right now the buyers aren't as strong as we'd like to be. But nonetheless, got to give them more credit is due. We have higher value, and we are one time framing up in the daily, just in the weakest sense possible. Got my colors all backwards. Here's our low of A, 24, 29, 24. There we go. And then we do have that 10Y point of control right here at 51.54, right? That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 wide? Yep, 10 wide. 51.44 even. Sorry, my nose was itching. Allergies. All right, so there you have it. So come tomorrow, buyers want to open above 51.44. Realistically, get some acceptance above 51.50. Trade into that upper end of that distribution there at 51.65. Trade into that upper distribution. If we do trade into the upper end of that distribution, you'll most likely fill that set of single prints, and then you begin to work your way into this distribution right here. And ultimately that target on the upside is going to be 51.8975. And then where the single prints fill at 52.01. And then that upper distribution is going to be very difficult to get into and stay in first time there. So if we do get some legs to the upside, those are the targets on the upside. On the other hand, on the downside, if we cannot, or if we do take out today's low of 51.1875, then the daily will come back into a balance, and we'll most likely continue to chop in that range that I was describing, depending on how much we get to the downside, but not really looking to that. We still have this gap that we're holding right here, that gap from 50.90 to 51.04. We are still holding that gap. So, you know, whether that gets filled before or after the FOMC, Only time will tell, and we'll have to monitor it. If we do take out today's low, see what we get for it, if anything at all. If we get some type of trend, who knows? The last 2 days, Friday and today, we have had some very large point of controls, meaning either somebody is distributing anything that they've accumulated here, or they're finally starting to get back into this market right here for the push back to the upside. In my personal opinion, from what I'm seeing, this could potentially be a small distribution of somebody who accumulated at the lows here. This could be a small distribution coming back up as we are coming back into some type of overhead resistance. So this could lead to a push down if the buyers are not strong. And if they aren't, then it is what it is. Maybe we get back into this gap where somebody will, or the buyers and the short covering will come back in, and this market will eventually get moving back to the upside. We at least hope. All right, now let's look at the larger time frames, and that would kind of explain why we are looking for that larger move back up. The monthly is firmly back into a balance. All right, monthly is firmly back into a balance between 48.7450 using February's low, and then March's high, 53.2275. We could continue to trade back and forth in between this this range essentially before breaking out and potentially making all-time new highs, or at least that is the idea. So right now the market is in a balance. We will eventually at some point have balance rules where we get near that 5,300 level. We'll have to monitor it and see how we react to it the first time if we ever do push up. And same thing on the downside, if we ever find acceptance below the 5,000 level, how we react to that 4,900 level as we approach that balance low in the monthlies. So we could continue to chop in this area. I mean, there is nothing telling us that we can't continue to chop in this area between here and here, get some consolidation on the monthly time frame before finally moving up. There's nothing telling us that is not possible, other than on the smaller time frames. The weekly is trying to push up higher as we are officially back to balance on the weekly. All right, now we do have an inside week up scenario where last week we closed inside this previous week's range, and then this week we are taking out last week's high, attempting to push up higher. Now we are back to balance in the weekly, so we'll be using that large week's range of what's that low? 49.91 will be the balance low of that. 49.91.25 will be the balance low of the weekly as we are officially back to balance. So we look to attempt to push up to the balance high here, which will be that week's high of 52.13. Okay, 52.13 will be the weekly balance high. So what we want out of this inside week up scenario is a push to test the balance high. And if it is a strong push, we should get above that 5,200 level, which would mean in the daily and in our 30-minute time frame, we are finding acceptance above 5,200, which would lead to the larger move back towards the highs, right? It's all baby steps. And then lastly, looking at the daily, having some issues here, right? The daily is having a bit of issues. We are one time framing up in the daily, okay? We're back above that March monthly low. We are breaking out on the daily. Been one time framing up 2 days in a row. 3 days if you want to use that outside day up scenario. But 2 days in a row technically. And we have just touched the 20-day moving average right here at 51.5350. So we need to get back above both the 20-day and the 50-day moving average, which would mean acceptance above that level of 51.67 that I was talking about, and pushing up higher into that 5,200 level, right? So it's all baby steps. Even in the smaller time frames, we got to see that. But as you can see, the stair step and series of higher highs, higher lows is beginning to happen. Volume has been absolute ass. So hopefully That will change if we do get some type of push back up. Maybe we get some short covering, which would lead to some larger positions being built to push up higher. So right now, the main focus on the upside is getting back into those distributions on the upside and getting above the 50 and the 20-day moving average. Just real quick, I do kind of want to put those on the chart here so we can see exactly where those are located. Let's go here. Let's do the 50. Boom. Apply. Okay. So there's the 50 right there. And then we need to get another daily SMA real quick. Boom. Add. Edit. And then we need to turn this to 20. Make it yellow. There's the 20-day moving average. So in our 30-minute time frame, you can see how that's lining up with that distribution right here. Right? You can see how it lines up with that distribution. So the first step is to get acceptance back into that distribution right there. Get above that 20. The next step would be getting above the 50 and finding acceptance in the distribution there, right? And there's not a lot to it, right? If we do get above the 20-day moving average tomorrow, we will most likely push up into that larger distribution and test the 50 up here at 51.83, in my opinion, just due to the fact that we are one time framing up in the daily. However, if we do not get above the 20 and we do exactly what I was saying earlier, we could roll over, take out the daily low, and then we have that gap on the downside that needs to be filled. So we'll see how that plays out moving forward. We'll catch you guys in the next one. See you.